Okay, I think it's now 31 minutes past. I think we get started. So good morning, everybody. Welcome to our last Q&A session for 2024. Sorrel's away on a well-deserved leave, so he's stuck with myself and Ross. Ross will be discussing Naspers and Process, and then I'll be doing my usual technical analysis, and then we'll have our spot for questions. So over to you, Ross.
Awesome. Thanks, Sean. Thanks for the introduction. Morning, everyone, guys. For those that don't know me, my name's Ross Van Coller. I'm covering Naspers and Prosus today. Previously, was involved in consumer staples and healthcare. We moved over to some tech now. So I've taken over from Matt Swart, who did a very good job on presenting this previously. And I'm going to continue with all the good work he's been doing. So since our last report, we reported in, I think it was the beginning of October, there's been a few changes, but not too much, one of which being the first half of 2025 results. There's also been a new CEO who was announced at the previous report, but he's in there, and now the CFO has left at the end of November. The other notable things that have happened is Prosus sold stake in Trip.com, and then one of their businesses that they had a stake in called Swiggy Limited, listed at $11.3 billion in India. So they still have a 25% stake there. They took some profits, and that adds to a little bit of the listed business. As far as our intrinsic value goes, not much has changed. We still have a hold recommendation on it. What changed since the last time was basically a number of offsetting factors. The sale of those two businesses that I just mentioned. Tencent was down about 4% since our last report. They've got an ongoing share buyback program, which started in June 2022, and that's open-ended. It's going to continue going. So we've seen a slight discount or narrowing of the discount to the net asset value, but the majority of this business obviously sits in the valuation of Tencent, which they own a large stake in. I'm going to jump onto the results. So this just came out at the beginning of the month for the first half of 2025 at the end of September. They basically report on all their unlisted businesses, the continuing operations, as they like to say, broken up into these 5 categories. So they drove revenue by about 26%, mainly from e-tail, food delivery, and payments and fintech. The two are a little bit smaller, but it is the first time since they've broken an operating profits in these businesses. Previously, these were loss-making, and now it's turned a profit to about $60 million, which is quite small in the grander scheme of things, but it's good to see that unlisted rump of the business, as we like to call it, turning a profit. So as part of the share buyback program, they've been selling Tencent shares over the last two years. Previously, it was above 25%. It's gone just below 24% now, and they take those proceeds and they buy back shares of Prosus and Naspers to try and narrow that discount. As far as the business goes, the headline earnings were up 76%, which is very strong, but all of that comes from basically from Tencent. Tencent's profitability, Tencent's value going up. But you can see they've done a very good job of narrowing that discount in the last 2 years. They've bought back almost a quarter of the free float shares. And obviously, we've seen the narrowing of that discount, which I'll touch on in a moment. This is just, if you're wondering what basically the difference between Naspers and Prosus is, this is how they report. And you can see it's basically a mirror image of one another, side by side. I touched on these basically categories and how they grew. The only difference you'll see would be in the e-tail segments, a difference of about $400 million. And that's basically their Takealot stake. So it adds to the revenue, but it detracts from the EBIT as Takealot is still loss-making. So the majority of our valuation, as we discussed, is that 24% holding in Tencent. I mean, if you look at all the other listed businesses that they have, some of these might be familiar to you. It sort of pales in comparison to the Tencent holdings. Tencent's almost a $500 billion company, of which they own just under a quarter. So you've got about $120 billion there of value just from owning those shares. The rest of these guys sort of just make up 20% of the business. These are just top, I've got about 8 there that contribute to Naspers and Prosus. This is just to show where we've come from our last report. Reported just at the beginning of October. Tencent's been on a slight decline, and the other two have Naspers and Prosus have outperformed Tencent. So that's where you would see your narrowing of your discount coming in. It still trades at a discount of more than 30%. Prosus trades at 32% discount, Naspers at 35% discount, which is not unlike history. It's actually more or less on par from a Prosus point of view. Bit of a messy chart this, but you'll sort of get the point of how their listed businesses have been doing over the last 3 months. All of them in positive territory, but the main driver of this is that blue line where you can see Tencent's up about 10%. Naspers and Prosus have outperformed. Some of the other businesses have done very well, but in the broader scheme of things, it's a little bit immaterial to the overall share price. Or intrinsic value, should I say. So this has basically been the talk about Naspers and Prosus for many years now. Essentially, if they just sold every single one of their Tencent shares, you would get a value that is greater than Naspers and Prosus. So they trade at a discount to that. Historically, Naspers has always traded at a greater discount than Prosus. Prosus is sort of more or less in line with its long-term average now at about the 30% mark. And previously that discount between the two was quite large, but because of the share buyback program that they've initiated, they're sort of narrowing that discount. So now you're almost seeing it come to close to parity, whereby Naspers trades at about 35% discount to NAV and Prosus trades at 32% discount to NAV. So that was all part of management's plan that sort of took place at the start in about June 2022. So you can see that sharp pullback there. And since then, that discount is slowly but surely coming down a bit, which has been good for Naspers and Prosus shareholders. I don't want to bore you too much with the details. It gets a little bit complicated, but essentially, if you look at the top here, you look at the listed value of the assets for Prosus, comes at about 1,000 Rand a share, and that is all. It's about 80%. 10 cents, 10% of those other listed assets I mentioned, and then the last 10% is that unlisted, which is where the group results breakdown comes in. That sits in the unlisted part. Naspers owns 43% of Prosus. So essentially you've got 10 cents, Prosus owns 24% of 10 cents, and Naspers owns 43% of Prosus. So you got this filter down value, and we apply certain discounts based on risk, mainly tail risks, but if they materialize, it would be quite consequential to the share price. So just based on that, we do have a slight downside on both of these, but it all depends on the narrowing of that discount to the 10 cent value, which over history has never gotten quite close there. So, and we don't see it happening. So we apply our holdco discounts, which obviously detracts from our intrinsic value quite substantially. That's it from me. I'm going to turn you over to Sean for the technicals before I take any questions, if there are any. Thanks, Sean.
Cool. Thank you. Yeah, you can see the chart there of Naspers. That's until yesterday's close. So you can see recently it's completed what we call a double top reversal chart pattern. It's shown there by the two circles that are shown on the chart there. And it's basically failed to break up above that previous all-time high, which is around about the 4,470 Rand level. Saying that, in the short term, I see also the share price has rallied up again. Looks set to retest that resistance level again. So we'll see in the next few days. Both the long-term and the medium-term trends remain bullish. The share price is still trading above, or far above its 20, its 50-day and 200-day moving averages. On the downside, the previous resistance at about the 4,300 Rand level will now act now as the new support level. Should that support level not hold, the share price could fall back towards what I call the support zone, and that's between 4,100 and 4,000 Rand, and possibly test that longer term support trend line coming from the bottom there, which is close to where Ross said now is the intrinsic value of 3,823. And as Ross said, now we still have a hold recommendation on the share. The MACD indicator at the bottom there, it's trading in overbought territory, so above that zero line, and it's trading far above its trigger line. So it's not giving any clear bearish signals yet. Okay, let's switch over to the Prosus. There we go. So with Prosus, the share price is moving sideways in what I call a trendless range in the medium term. The recent high was reached in October, and it was around about the 805 level. While the all-time high was, it doesn't show on the chart here, it was way back at in January 2021, and that was 975. So the medium-term and the long-term trends also remain bullish. Again, because the share price is still trading above always moving averages. And it's also just above its intrinsic value there, as you see on the chart there, of 737. The previous resistance level will now act now as the new support. Should that support also not hold, we could expect to pull back to the lower longer-term support trend line, about 680. I don't think it will get down to there. But the MACD indicates also, again, similar to Naspers, trading in overbought territory and above its trigger line with no clear bearish signals yet. And hence our whole recommendation. And that's how I see it.
Awesome. Thank you, Sean. Yeah, if there's any questions related to these two companies, please just type it in the chat, or if you want, you can just ask it outright by unmuting your mic and asking the questions. If there's anything in the chat, can you just let me know, Sean, because I can't see it.
Yeah. No questions. That's it. Well, guys, then if there's no questions, I think we'll call it a day. Oh, there we go. That's a question from Karina. Are you worried about China's growth? Or lack of growth?
Yeah, that's I would ask that in another presentation. Actually, it's yeah, from a macroeconomic point of view, China has always been, the question about what's going to happen with growth. Last time they underwent a loosening of their monetary policy, it seemed like the growth sort of spurred on. So it seems like they might be doing that again, in which case you should see at least a short-term uptick in China's growth. But when you look at Tencent, it's sort of vital to most Chinese everyday play. WeChat, WePay, that's even excluding the gaming. It is a very integral part of the Chinese system. So just based on sort of GDP forecasts and going forward, it's not too much of a concern for us yet. But yeah, it's a bit of a difficult one going forward from a macroeconomic point of view, where that's gonna play out. For now, we can just be sort of conservative in the sense that Tencent's not necessarily very expensive on a broader PE look. I think they're traded about a forward multiple of about 17 times, and if you compare that to the Googles, the Metas, all those other guys, it's below them. But we're obviously discussing a Western versus an Eastern a discussion, which is not exactly apples for apples. Sure. But as things stand, it's not front of mind. I think we will see probably in the short term no problems there. China will probably support them through monetary policy, which will filter through to the consumer and provide a boost, at least in the short term. The long term, that's a discussion for another day.
Cool, thanks, Ross. I hope that answers your question, Karina. Are there any other questions? Raise your hand or speak out or type your question. No, that's it. Well, it looks like it's our last one for our year. We should be back, I think, maybe the second Thursday in January. So, guys, thank you very much. Have a blessed Christmas until the new year. All the best. Keep well. Bye-bye.
Thanks, everyone.
Thank you. Bye-bye.
Bye-bye.